What's going on, guys? This is Market Omega. I'm back with another yearly recap and new year projection. So I'll be doing this recap for you guys. So without further ado, let's jump right in. All right, guys. So it's been a while, right? I think it's been, I think the last time I recorded this, I think that was like 6 months ago, maybe. I took a break from recording it just because, for one, the market was kind of, tapering off the momentum and, it was a little slow. And secondly, I just had a lot of stuff going, right? I had, newborn, I had more things, that took my time. I just had more pressing matters than just recording videos. So I just wanted to pick back up and, touch base with you guys, see how you guys are doing. You guys leave a comment in the comment section. Just let me know how you guys are doing in the market. And, what you guys think of this slow market. I don't know. I don't know. So I just wanted to, before I go into the recap, the 2021 recap, I kind of wanted to briefly touch on, where we are right now. What happened last year with the SPY and where are we right now? Where do you see us going? What I think is going to happen going forward? Last year, I made a prediction, a very ballsy prediction. I mean, if you watch the recaps that I was doing throughout 2021, the start of 2021, I basically just said we're going to be ending the year a lot higher. And I think somewhere in the first quarter of last year, I basically just said, dude, we're going to end up at 480. That was my target on the SPY. $480, right? Give or take. Maybe, we could overshoot to 500, but 480 was my target. And I stuck to it. And guys, believe it or not, boom, 479.98, literally 2 cents to the target. I mean, how dead on is that? How accurate is that, man? This is insane. It was absolutely dead on. I challenge you to go online, go over the internet, find somebody that made a bold prediction like I did, right? And actually, and the SPY actually hit right at that target by 2 pennies. Go look around. I don't think you'll find anybody that was dead on, dead on accurate like I was. So it was pretty good, man. I was proud of myself. So I basically just said, we're going to be going up. We're going to reclaim, and then we're going to hit up, go all the way up to about the 480 level, and we almost hit that. Now, what I said, and I've been saying it towards the last year when I made the same prediction, I basically said, look, we're going to get up to about that 480, and we're going to correct. Go back and watch the videos. Watch the video all the way back to early last year, or if you don't want to go all the way back there, you can just, go into the summer. Right around June, I said, 480, and then we're going to correct. We're going to have a major correction, right? And look what happened, right? 480, I'm just going to round this up to 480, whatever. 480, correct. All right. Now, where do I see us going this year? What do I think is going to happen this year? Now, I will say this. I knew we're going to correct. We're going to have this correction. I'm still thinking we go lower. It sucks. I still think we're going to go lower. Now, if the market ends up reclaiming right above this 200-day moving average, right? We reclaim, maybe, let me move this back here. Maybe kind of chop around a little bit, and then somewhere around March, April, we take out this 480 high. I think we can go up to about 520, maybe 530, and then we're going to have another major correction. Now, if we stay here below this 200-day moving average, heading into about February, right? Like towards the end of February, and we're still not above this like 450, 460, right? We haven't like reclaimed above the 200. I think we're just going to end up going into a bear market. Now, here's the thing. There are two ways it could play out. Okay, there are two ways a bear market could play out. We can have a steeper correction or a steeper bear market, and we're going to end up like starting to go up. The bear market is not going to be as prolonged if we do that. Or we can have a much more grindy bear market where it kind of takes us a lot longer to correct down to about, I'm thinking maybe right around, like 360, right? Or maybe, I don't know, maybe 340, 360, somewhere around. I don't think we're going to break 300. I definitely don't think we're going to get there. I think maybe we stop at like 350, right? And it's going to be like a prolonged bear market where it's kind of like grinding down. We, throughout the year, we chop around and then we grind down some more, chop around. And we do that throughout the 2021 and head into 2022 and before we start to bounce up a little bit. Okay, so I don't want to see that. I'd rather us just nuke down, just go straight down, maybe bounce a little bit, and then it takes us like 7 months to go all the way down to about the 340 to 360 level, and then we start going up. I want to see that, right? Just rip up the bandage, rip it out really quick, get the pain over with, and then we can start going into continue on our bull market journey. Then having us just keep on going down, and I just don't want to see that. Okay, so going into the year, there's two scenarios. I just think if in February we haven't reclaimed above the 200-day moving average, I'll be like 80% confident that we're going to be going a lot lower. We're going to be going down to my target, which is somewhere between the 340 and the 360 level. Okay, that's going to be my target, right? If we don't reclaim by February, if we don't reclaim the 200 by February. Now, if we do reclaim the 200 by February, right, we reclaim above it and we're like right around this 450 level, then I think we're going to go take out the high. By right around March, April, we take out this 480 high and we head up to about the 520s, which 520, 530, we're going to see another correction. Okay. So, not financial advice, right? Obviously, I'm not a financial advisor. Consult with your financial advisor. I'm not telling you guys to go mortgage your house and, look for a bull market if we're above the 200 and moving average. And I'm not telling you to do anything. This is just my opinion. It's a free market. And I just, just based on my analysis, I think that's possibly what can happen. Okay. So, all right. So now that we've got that out the way, let's just go into the small caps. So 2021, the small cap market kind of respected the historical cyclical nature of like the momentum in the small cap market, where we usually have like the spring. 2021 we have like spring, and then the summer is kind of slow, and then the end of the year we start to pick up. Right now we've kind of seen a slight deviation in the cyclical nature of the small cap market because of COVID and new entrants into the market and more volume, more volatility, right? We've got more retail presence in the market. So the small cap market, normally, like now we've kind of seen more momentum in the summer, whereas 5 years ago it was always dead. The summer was always dead, right? Now we've kind of seen more people in the market. So the summer we're having more movement. Okay. So last year, we had like the spring doing well. We had the summer, some momentum in the summer. Okay. And now towards the end of the year, that's when it kind of got different. I was expecting the end of 2021 to have a monster rip in the small cap markets, which is what we normally get, right? Starting from like around September all the way up to December, and then into January, February of the next year. It's always filled with more momentum. And, fund managers a lot of times they need to hit their bonuses. Right, so they're jumping to the market, and you have more money in the market. These guys are trying to hit their bonuses, which, A lot of times the way they make their bonuses is based on what the stock price is. So if the stock price is higher than what it is, they have those get those bonuses, and also those options get vested. Okay, to vest those options. So, but that's not really what happened last year, right? September, it was pretty good. Okay, we had let's see a few names that we had. RKLB, yeah, that was one. We had RKLB in September, right? This thing went from 10 all the way up to about 21 in a few days. What else do we have? I think we had INDP. Oh, gosh, you can't even see INDP. You can barely see this thing, man. This is, here, one sec. Whenever you can't see a stock like this, when it's hard for you to see it, you just know that the stock is diluted a lot. These are all like reverts, pre-split. I'm sorry, split adjusted prices, right? There's a lot of dilution. So, but yeah, so we saw some movement in INDP, right around the September time, right there. You see that? Big spike. I think we had IRNT as well. Where are we? IRNT, right? September, big spike. And we got a little bit of a spike right there in October. What other stocks? GWH, right? October, big spike, sell off. I'm just trying to run through some of these names here. JSPR, right? Big spike in October. So you had a few names right there, right? Let's not forget DWAC. DWAC, I mean, I made some nice trades on DWAC. DWAC was October, big move. I mean, DWAC was insane, right? From $12 to $175 in 2 days. Now, DWAC is that the Trump SPAC, right? The Trump SPAC, and it's been big, man. DWAC has given us a lot of opportunity. There are a lot of people that are trying to short this name, but I think DWAC going forward, DWAC has a lot of room to the upside, especially since we're holding this key breakout level, right? We broke out. Now this is a retest. I think we go higher going into next month and March. So keep a close eye on DWAC, guys. Watch it closely. All right. So we had DWAC, and then, we had ISIG. And what other names do we have? And we had CNTX. Yeah, that's another one I made some good money on. I actually banked on CNTX in November, December. That was good. Made money on this day. And then we had ADGI. I think, yeah, ADGI. Right? So after, right around December, it just slowed down. There was like nothing. We just kept waiting for that momentum that will come, and nothing came. Nothing happened. Everyone's like, what's going on? Like, we don't have that crazy momentum that we normally get around December. And same thing, January, there hasn't been momentum. It's gotten so bad. I mean, people are taking the day off. People don't even trade. You have, like I myself, I actually pivoted to trading large caps. I started trading large caps now. I traded some large caps. I guess you would consider DWAC one of those because it's a higher price. I traded... And when I mean large caps, mid to large caps, like either higher priced or higher float, higher price. Trying to think some names that I traded. Did I trade this? Yeah, I think I traded this Foot Locker a few days ago. I traded that. I think I traded that on the 24th. Let's go look at the 5 minute. Was it on the 24th? I don't know. I traded Foot Locker one of those days. Obviously, DWAC. DWAC was a stock that I traded almost every day because DWAC offered nice washes. Like it'll wash out and then reclaim towards the midday. It always did that. It always had this wash out, reclaim. So I was able to trade DWAC. AMC. I've been trading AMC. AMC hasn't really done much, but I was able to make some money off of it a few days here and there. But AMC, man, the apes are hurting. They're hurting on this name. Look, it's this day right here, right around the last year. I was thinking that we were gonna break out of this area right here, this 440, 450 area. I'm sorry, $45 and $44, $45. We're gonna break out and head up to about 70 because that's the measured move, right? But what happened was we came below the 200-day moving average, retested it, sold off, and look, see that? We've just been going down since then. So, which is kind of, I'm looking at the SPY right now, and that's what I'm saying, right? If we can't get above this 200-day moving average by like February, we're just going to keep selling off, similar to how AMC looks right here. Okay, so you don't want to see that. I do not want to see that at all. All right, so I've been trading some large caps lately. In the small cap land, you have stocks that just kind of pop, like they'll pop and then they just get faded. Okay, like they'll pop like the first 10 minutes and then they just fade for the rest of the day. Or sometimes they don't even pop. They just kind of like open and just fade, you know? So it's just been the theme. Also I traded Peloton, right? So Peloton came out with news. What day was that? They came out with news on the 20th, right? The 20th of January. And they basically said, that was a report on CNBC that said that they're going to stop making exercise equipment. Now, you guys know Peloton has been one of those COVID lockdown trades because people had to work out. So a lot of people bought those cycling equipment and they were going hard. Cycle, Peloton, and Peloton stock just shot up. I mean, Peloton went from, look at this. This is, what is this, 2020, right? This thing went from like the 20s, right? 17, 20, all the way up to 171. This was insane. Absolutely insane. Okay. So now, when the vaccines came out and they reopened a lot of businesses, people could go back in the gym. A lot of people realize, hey, you know what? We don't really need that Peloton like that anymore, right? You have people trying to return their equipment, and some people don't use it anymore. They don't subscribe to it. So now you've got this below its 200-day moving average, and it's tanking. But it's actually getting to a level where it becomes much more attractive. So you start watching this area right here. We can start getting to a level where it gets more attractive. If we break this 1770 and we don't close above it within a few days, this thing can go all the way down to 10. It could be bloody. It could be bloody. So anyway, Peloton was one of those names that I traded. So what happened was, if you go intraday and you take a look right here, we had this bloodbath when CNBC came out with that news. And then in after hours, the CEO came out and said, hey, nope, false alarm. We're not stopping our exercise equipment production. Okay. So you have this monster. When they came out with that news, you have the spike right here. Boom. So when I saw that in after hours, I was like, okay, you know what? I'm going to keep it on watch for the next day. And sure enough, we had a continuation. I was able to make some money on this day. And that was pretty good. Made some money here. Okay, and I think I actually made money here as well. I think I made money on this day here on the 24th. So since then, I've just left it alone. I haven't done anything with it. Just I've left that alone. So Peloton was good. That was a good trade. I also traded SOFI. Okay, you guys know SOFI. They're like a lending company here. So gotta get rid of all these lines, man. So SOFI was a stock that I traded. I think they had earnings on the 18th and after hours, and then the next day I traded this, and then the day after I traded that as well, right? As soon as we broke out of this level here, boom, this nice bull wedge, boom, target 15, right? 15, 16, look at that. So that was good. SOFI was good, and if you notice, like these names that I'm talking about, they're like higher float names, high float, high price. Okay. So because there was not a lot of momentum in small cap land and small cap looked dead, you always have to readjust, right? You've got to go out there. You can't complain and bitch and moan about the market. There's always an opportunity somewhere. You just have to know exactly where to look, right? So we found some of those opportunities in the mid to large cap market, right? And then you also had Sierra Oncology, right? SRRA, right? Price is $22. This day, I traded that, made some money. That was pretty good. And then here, I made money here, and I traded this as well. Made money in after hours when it broke out at this $30 level, popped to 32. So that was pretty good. And obviously left that alone. So yeah, you know, it's whenever the market is like this, you've gotta relax. It's okay not to trade. It's okay to take a day off. Well, hell, you can take a week off, right? And trade only the best setups, right? It bears repeating. I say that a lot. I always say, hey, you can readjust your share size, focus on, proper risk management, but it actually bears repeating because in times like this, when you throw risk management out the window and you take a loss, you're not going to be able to make it back. I mean, it's going to be hard for you to make it back because we don't have that much opportunity in the market for you to make that money back. So if you're just trading without proper risk management or position sizing and you lose money, there's no way for you to make it back, at least not that day. You have to wait the next day, and who knows what's going to happen. We might not have momentum that day, the next day. Okay. So when there's no setups either up or down, I mean, shorts were actually, hurting as well because momentum, right? Moves like this, right? Moves like this on INDO are good for longs, and they're good. They're good for shorts as well because shorts can whack it when it gets up there, right? Lower highs, they can whack it. Longs can come in for like dip buy opportunities as well, right? When it's popping. Let me see if I can go back to a lower time frame here. INDO was a monster yesterday. INDO started moving, it was insane. But it didn't give us that much of a dip buy opportunity. I mean, it got halted a few times. You could have gotten long right around the halt level, right when it washed down. You could have gotten long, right into key support there, and you could have rode the wave up. But I like stocks that dip like this. This is a nice dip, reclaim, going up. And today on INDP, it actually formed this bull wedge right here. Not bull wedge, like a bull pennant formation. Okay. The only thing was we never broke, we never actually held above this 740 level. This would have been a nice breakout, right? Breakout at 740 right here, hold above it, and then go all the way up to about the 920 level. But we just didn't do that. But all in all, I'm still watching it today just for this, if it comes down to retest this support right here, we could, have some buy opportunity and then write this thing up. So this is one stock that I'm going to be watching for later on today to see what it does. Okay. So, yeah, it was a gapper today. Also, we had IMPP. That was a stock that I made money on. Popped up, pulled back, got in. Can't see that. Pull back, got in. Boom. Right now, it's kind of forming this wedge here. You can keep that on watch, see what happens. It's right there. Just keep that on close watch. KSVP, another stock that's forming a wedge, but there's low volume. This stock's got a low volume. Okay, it's got really low volume, but the setup looks great though. It just has low volume. They had news this morning. Looks like they announced they added a new client. They're a security company, so they added a new client. The stock popped up, boom, then sold off. It's got to have more volume though. PRVB was another stock as well. I didn't trade it, but yeah, it offered some nice moves from around the 370 to about 417. It doesn't look like they had news. Well, actually, no, it did. It did. They announced an intent to resubmit an application to the FDA. Okay, it's a higher float stock, but yeah. So, but I didn't trade that. I just had it on the watch list. And then we had Robinhood, right? Robinhood was a nice stock. So what happened was I got in today on Robinhood. I think I got in. Where did I get in? Right around 11. It popped up to my target right around 11:25, but I turned away for a second. I was literally in the chat room talking to guys, and like this is like I turned away for like 2 seconds, 2 or 3 seconds, and it popped to my target and then started selling off. I should have had my order out there, and I would have gotten filled, and should have made about 23 cents or something. But I turned away for a second. We popped up to my target, and then we just got rejected, and that sucked. So I ended up stopping out. Now it came back, but I was too busy in INDO I was too busy watching INDO. But Robinhood, I mean, it's crazy. It's actually gone. It is going green on the day. That is insane. That is insane. Straight up green, right? Break above this 260 level, and we're heading back to we're heading back to backfill, possibly. So that's a name to keep on watch. What else? PFIN. PFIN is was a midday runner. It popped, shorts piled in there, and this thing just sold off. A lot of times, like these midday runners, shorts are gonna try to pile in just because it's been slow, right? The market has been really slow. So every time a stock pops up like this, shorts are gonna try to pile in. If it pops and gets halted, boom, pops, they're gonna try to short it. There are some rooms that make their bread and butter just from trying to short midday runners. So I mean, every single time frame, this thing just looks like shit. Looks like shit. It looks like crap. Look at the 1 hour. Boop, boop. All right. So that's that. I don't know. I just added this SRRA. I just added that on the list just to watch it for the next few days. Same thing with DWAC, right? Keep that on close watch. And Peloton, I'm gonna take that off because Peloton just looks like shit right now. It's not at the level where I could say it's attractive. It hasn't gotten to the attractive level. It's got to get down to about the teens. Then I'm like, okay, this has gotten really attractive for a possible bounce. Okay. What else? I've got this LCID. I've got to take this off. This was on my swing trade watch list there, right? So the LCID thing, okay, this LCID right here was basically, when I added it, it formed this nice rounding bottom right here, right? This is a cup and handle. Okay, so you got this cup right here. The handle is right around here, right? You guys know cup and handle formations are really bullish, very bullish. Cup, handle, it comes through, it breaks out of the handle, and then it just goes insane, right? Some people buy this breakout right here of this handle, the 40s, because, I mean, you could have gotten about 7 points of room. But if you're trying to be conservative, they just buy this break right here, this top right here, 57, and then they ride it. But anyway, this was a failed move. It broke out, came back. I was thinking this thing was going to try to retest that initial breakout, but it came down, and then it's been going down. Right now, it's below its 200-day moving average. And I guess one of the reasons why some of these stocks are falling like this is the SPY. The SPY has been shitting the bed, right? So the last few weeks, the SPY has been going down, and these stocks are going down with it. So, I mean, hoping to God that the SPY can rip and stay above its breakout. So yesterday I was talking about the SPY. It formed this nice inverse head and shoulders, right? I posted that on Twitter and in the chat room. I said, hey guys, keep a close eye on the SPY. This is a nice inverse head and shoulder move. If you take the target, the measure move of the target is right around the 450 level, right around. No, actually, was that 460? Yeah, it was right around 446. It was right around here. I think that's what I said. So that's the target of the measured move, right around 446. So we opened, right? We opened right here in the 430s, popped to about 440s. And I was like, oh man, we're going for it, right? We could have easily gotten down to that target. And then look what happened, right? The Fed came out with news the day before. They came out with, they had the FOMC meeting, right? And in going into that meeting, I thought that Powell was going to come out with really hawkish statements, right? And which we already know, right? We already know that in the past he's already, the Fed has already owned up to the fact that inflation isn't transitory, right? Inflation is going to be here to stay. It's going to be a part of our everyday life. There's no way. Okay. So they already did that, and inflation has been off the charts. Like, we've got the highest rate of inflation, I think it's like in well over 20 years, and the Fed has to taper. They've got to taper. They've got to raise rates. The Fed has to figure out a way to stop the money printing, right? So they've pretty much got to get rid of that. and they've got to raise the interest rates and see about like curbing inflation. Okay. The Fed's dual mandate is basically the inflation and unemployment. Okay, they've got to make sure that the economy is at a point of, their goal is to basically maximum employment. They have to lower unemployment and also make sure that interest rate, keep the money supply, keep inflation at a certain level. They don't want it to get above, levels where it just becomes, everything is becoming way more expensive. If you look at the housing market, it's been insanely overpriced all over the country. It's just way too overpriced. And a result, part of that is just because of the Fed lowering interest rates for so long, especially the lowered rates, since the COVID. And they just kept printing. There was so much money in the economy. They had to print. Right now, the Fed balance sheet we're running out of deficit. Okay. We're running out of deficit. We're trillions in debt. And, there's so much money in this economy now just because of that Fed printing that everything has gotten way too expensive. Rent has gotten way too expensive. What's happened because the housing market is way overpriced. It's pushed prospective home buyers to rent, and because now there's an influx of home buyers, those that can't afford to buy homes, rent prices have gotten way expensive, right? So it's just this cycle, right? Rent prices are expensive, home values are expensive, even cars are expensive. You can sell your used car right now for more than what it's worth. Like if you got a car that's actually worth $5,000, some dealerships will give you $7,000. You can sell it for like, $8,000-9,000 in some cases. Okay, so there's a lot of inflation, and everybody is out there trying to take a piece of it. Everything has gotten way higher. People are jacking up their prices for stuff. So the Fed has to make sure they curb the inflation. And going into that FOMC meeting, I predicted that they were going to come out with hawkish statements. And they basically just came out and said, hey, we're going to leave the rates unchanged. So it's kind of like, whoa, right? Instead of a hawkish statement, they came out with dovish statements. They're going to leave rates unchanged. So the SPY, what happened was when they came out with that news, you got this crazy pop right there. Just from 440, it popped up to about 444. So I'm thinking, okay, well, right, we're going to go up. We're going to keep on going. And what happened was they, during the press conference, Powell press conference, the statements, became more hawkish. It looks like they're going to be raising rates about 3 times this year, sooner than expected. I think the next rate rise is going to be right around March. Okay, so the market didn't react too well to that, so it started falling. And I'm not an economist by any means, right? I'm not an economist, but just to deduce what the Fed was saying, it's basically just saying, hey, look, we're going to have to curb interest rates. We're going to have to stop this money printing sooner than later. All right. And what happens is, when the Fed raises rates, when they're trying to curb inflation and stuff like that, that actually is good for the dollar. You can go long the dollar, and the stock market typically doesn't like that. All right. They don't like it when the Fed decides to raise rates and, stop the money printing. Right. The reason why the stock market goes up when they, lower interest rates and they keep on printing is because investors can speculate more. Right. Investors and businesses and corporations, they can borrow at a ridiculously low rate and buy stocks to get higher yield. OK, if there's so much inflation, there's so much money printing, the bank isn't going to give you much for your money. They're not going to give you anything. So investors have to find a way to generate yield. It's not enough to just keep your money in the savings account or checking account. It's going to get eaten by inflation. So now you got to find a way to generate maximum yield. And the way to do that is taking more risks, right? So they put money in the stock market, and that's why the market has been going up. And if you take a look, go back, let's see if we can go back 20 years. How about that? Let's do 20 years. Go back 20 years. Look at the market. You know, take a look at the market, man. Go all the way back to 2009 when we bottomed. Look at that. We bottomed 2009 from, I think we bottomed at 67. And look at that. We just been going up without a major, without a bear market. We've had well over 11 years of a consistent bull market, the longest in history. This is the longest bull market we've ever had, right? Excuse me. At some point, we do need a bear market, okay? We had something that was going to be looking like a bear market right around this COVID thing, but look what happened, right? We came all the way down, boom, and then we had a V-shaped recovery right here as well. I don't know what the macro news was here, but we had this wash, V-shaped recovery, wash, V-shaped recovery. So it's left to be seen if this is going to be another V-shaped recovery. I don't know, but I mean, the investor in me would like for this to be a V-shaped recovery. Okay, I want this thing to be a V-shaped recovery, but will it be that? I don't know. Okay, I don't know. If we're going to be bouncing, I mean, we've got, this is, what is this, peak to peak. This was February. We came right around August. So about 6 months we took out the high, right? So if you do the same math, that'll be right around July. We come back and take out the highs. And then we just keep on going up, and maybe into the year end, we rally. So that could be the determining factor. I mean, it might not actually take us, if we're going to rally, if we're going to do a V-shaped recovery, it might not take us that long, just because this was a much steeper correction. This was like from 336 all the way down to about the 219. I mean, off the top of my head, I'm pretty sure that's way more than 30%. Right, that's, let's see, 30, 50, 90. Yeah, I think that's way more than 30%. I think almost 40% drop, right? But in this case, we've only been down about, I think like, what is this, like 12%? Yeah, I think right around 12% from 470 down. So we haven't had a steep correction. Bear market territory is like a prolonged move over 20% down. A prolonged move down, and it just stays there. That's the bear market. A correction is, anything over 10%. That's like a correction. So we're correcting. If we bounce, that'll be great. If we're going to be in a bear market, if we stay below this 200-day moving average for too long, we roll over. All right. So that is it. I think, just two scenarios this year. We're either going to have a bear market if we don't reclaim above the 200 by February, right? If we don't reclaim right around this 450, I actually think like about 90% we're going to be in a bear market. We're going to be going lower, much lower, right? If we do reclaim by, February, like, by the end of February, we're above this 450, we're going to come back and take out the high, and then, bull market resumes. We're not in a bear market. Bull market resumes, right? So I obviously want the latter. I want us to be in a bull market. So, but I just got to give you guys, two different scenarios. There goes that bounce on INDO coming up. All right, guys. So that's it. That's it for the recap. I'll be doing these monthly recaps going forward. Once again, if you're a member of our room, we're having our next webinar on the 6th. So we've got the next webinar coming up February 6th on Sunday. And we're going to be going over how to trade halts. Okay, how to trade these halted stocks. What to do when a stock is halted. How do you get in? How to get out? How to know when to long? How to know when to locate shares and whack it and short it? How to just know when to sit on the sidelines. What's the best way to trade it? So we're going to cover all of that in our next webinar in February. Okay, on the 6th on Sunday. So mark your calendars. That's going to be at 3 p.m. Eastern, which is, 2 p.m. Central. We're going to be out there in the room exclusive to Market Omega Trades members, right? And also, if you would like to check us out, we're coming up. We're going to be running a sale pretty soon, a Valentine's Day sale. So you can take advantage of that. I know the market has been slow, but you can come in. You can watch our videos. We've got countless videos on the website. We've got our webinars. We've got some video lessons. And, we've got the recaps as well. So You can take advantage of it. And we've got some great guys in the room, man. We've got guys in there that, they've been doing pretty well. Okay, so you got guys that trade large caps. We got guys that do swing trades, and guys that trade options, and guys that just trade just micro caps and small caps. So you find that in the room, and it's a good way for you to network, meet people, and share ideas. So So also, guys, follow me on Twitter at Market Omega. Okay, you can just type it in there. I'm there on Twitter. You're going to see my mug, Market Omega, so feel free to follow me. You can follow me on Instagram as well at Market Omega Trades, or you can follow my personal Instagram, which is at MarkGQ. Okay? And also, the links are going to be in the description below. Okay? You're going to see the link to our website and also the link to my Twitter and, my Instagram. Okay? So thank you guys for tuning in. Today is Friday. We're going to do another recap next month. And once again, if you're, just new to this market, remember this is not a typical market at this time. It's been really slow. So you want to make sure that you implement proper risk management and readjust your share size. Only take the best setups. And if there's none, just sit on your hands. Okay. We preach that in the room all the time. Okay. So I know this too shall pass. We're going to get up to a point where momentum is going to come back, but you don't want to use up all your capital before that. You don't want to blow your load. Okay, so that's what we like to say in the room. So guys, make sure that you're just taking only the best trades and just being patient until the next momentum comes. Oh, you know what, guys? Just really quick, I forgot to talk about Bitcoin. Here you go, guys. Forgive me. So Bitcoin, what are we looking at here? What do we have? So Bitcoin, we've got this drop right here from about, what is this? This is 69, right? 69,000 all the way down. We dropped all the way down to about 35. Okay. What am I looking at with Bitcoin? I think we could possibly bounce. Now, I know the SPY hasn't really been holding up for the last, I would say like the last 2 years, 2 to 3 years now. The Bitcoin market has been following the SPY almost to a T, right? You had this COVID scare right here. The Bitcoin came down and then it reclaimed. We got like this V bottom, and then we went and took out the highs right here of 20,000, and then we kept going, right? So right now, we double topped over here and we came all the way down. This is like a almost a 53% drop. In this case, we had the same drop, but we were at almost 65,000. But it took us April all the way down to about June when we bottomed, right? 2 months. Okay, so in this case, November, right? It's taken us almost about 3 months, and we've actually had a bigger downward move. Okay, so I just think, we can come back up. This is what I'm looking at right here. If we can figure out a way to come back up, take out the highs by the summer, and then rally into the fall and end of the year, we can rally. Okay, if we come back right around here and take out this highs, this will be a nice little double bottom right there, which will basically definitely take us well over 100,000. So, just keep that on watch. Also, you could draw a diagonal. Let me see. I'm not really good at using trading view, but let's see what happens. You could draw a diagonal move right here. You see this? You guys see this right there? Come on, clip. There you go. Oh, damn it. Anyway, yeah, there you go. So you see this right there, right? Boom, test, bounce, boom, test. And I'm hoping this thing bounces. And if we bounce, take out this short-term high right here, this 52,000, right? 53,000. This is like the major hurdle. If we get above this area, if we can get above this 53,000, I actually think we're going to go out and take out this highs within a few weeks. Okay, so just keep that on watch. All coins have basically just gotten smoked with the market. All right, they all follow Bitcoin. So, Bitcoin going down, they go down. Look at Ethereum, right? Ethereum is plummeted. I mean, I'm not saying plummeted, but it's pulled back a lot. It's come all the way down from almost 5,000 down to 2,400. You can still draw that same trend line. Let's see what do we have here. You can still draw that same trend line right here, right? Similar to Bitcoin. But in this case, with Ethereum, I think it still has some downward move to go. It still has some ways to go. Because Bitcoin has come down and touched its diagonal support. Theoretically, Ethereum could still do this, right? Technically, it could still come down and touch this 2,000 level before it bounces off. Okay. Or it could just be like, you know what, I'm not coming down. A lot of buyers are waiting here. Pro buyers are waiting here. They're just going to fake you out. They're going to act like they're going to come touch it, and then they just off it goes, right? It goes back up. They do that a lot. So Bitcoin and Ethereum, especially Bitcoin, it has a way of fucking everybody. when you think we're going to go in one direction, it says, nope, psych, it goes the other way. So if everybody's waiting for this stock to come down and touch the support, it just comes down a little bit right here, 2,100, and then it just takes off. And you have your buy order there waiting and nothing happens. Okay, so holding out hope on crypto market. Hopefully we get something good. Hopefully the market decides to give us the much needed bounce that we're waiting for. If you go on the monthly, you take a look at the monthly there. This is 3 red months, right? 3 red months. In this case, on the 3rd month, like if you look at this fractal right here, the same fractal on this 3rd month, this where we're at right now, it came down, but it almost closed. It almost closed green. Okay, it almost closed green. I mean, I think the open was like 37.2, and this thing closed at 35. But I'm sure it went up close to about 36, so it almost closed green. Right? Whereas in this case, in order for us to close green this month, we would have to get to about 46. We literally would have to get to about 46 or 46.3. And I don't see that happening this month. I mean, we've only got 1, 2, 3 days. Only 3 days. There's no way in hell, that we're gonna go break above 46,000 in 3 days. I mean, I just don't see that happening. Now, next month, by the time we close this month red, we'll have closed 3 months. So next month, I think we could come down to retest this same support. So we could go down all the way down to about 35,000. Maybe even like lower to about 33,000, and then possibly bounce. And once we do that, if we do that, I'm just going to say we're just going to head higher. We're going higher. If we come back to retest this level and just bounce off of it, and we get to about the 40,000, off we go. I don't care what the SPY is doing. Off we go. We're just going to keep on going higher. So fingers crossed. Let's just hope that's what happens. All right, guys. Thank you so much. Thanks for tuning in. You guys have been great. Take care of yourself. It's a Friday. Have a wonderful weekend. Take care of your family. And I'll catch you guys next week for another recap, okay? I'll catch you guys next month for another recap. Take care.